Hi, and welcome back to my channel, My Tax Guy, where we explore all things tax to get you ready for the up and coming 2023 filing season. Now, without further ado, I want to just jump right in and get to the meat of today's topic. But before that, I want to just say thank you to everyone who is sharing, and subscribing to my channel. Let's continue to grow. Let's continue to get good information out there so people can make the best decisions for their tax future. I will be covering other topics later on, but right now I just want to focus on your taxes and getting you guys ready to get a good understanding, a good basic knowledge of what should be happening with your tax return and your taxes, and what's the best way to come out on top every year. Now, today's topic is going to be the AMT, the alternative minimum tax. That tax is a tax that was designed initially to make sure that our higher earners are always paying what's called their fair share. I know you've heard of that. That's what the AMT is designed for. Some of the critics says that the tax is a bit punitive, as it is not their fault that they take the best advantage they possibly can of the current tax law, and that it's also restrictive to whatever they want to do with their refunds. So they can either invest it in other things, or they want to apply it to different avenues. And they say that the AMT basically gets in the way of that. That has been one of the top constructions. Another criticism of the AMT is that it may not do enough. People who look at the AMT, they don't view it as something that's effective in making sure people pay their fair share, because they're still able to take advantage of certain breaks that lowers their AMT, which will of course bring them back down to having to pay the regular taxable income. And they really don't want to do that. They want to figure out a way to just have them pay as much as possible. Of course, in recent years, with the change to the tax breaks, even though a lot of people don't see it, that 37%, that reduction from 40% to 37% has literally taken billions of dollars out of taxable income. So you've got to understand, and when it takes that out of taxable income, that of course lowers the amount of income tax that has to be paid. So we're not talking about, a couple of bucks here and there. We're talking about billions of dollars. Even the corporate tax rate, when it was basically cut in half, from 39% to 21%, you're talking about basically cutting the corporate tax rate in half. So corporations who basically, they didn't get refunds. We're talking about Fortune 500 companies are getting tax refunds. A change like that, it affects the economy very much, and a lot of economists say that rate is one of the primary reasons why we have the issues we do as far as attacking the deficit. Now, with that being said, the AMT was looking to fix this. If you want my opinion how effective it is, it's 6 of one, half dozen of the other. It does kind of put the higher earners on notice that their income can be taxed, as they're basically earning more money. At the same time, if they can take advantage of certain programs and investments, they can actually lower their income below the threshold, which will allow them to pay less money. So that's one of those things. This is especially important for people who are considered contractors or independent workers, agents, things like that, where they're making a good sum of money, but because they have to do like a Schedule C first, they have to take their income and deductions. And that income, after that's done, it may not be subject to AMT. It's part of the course of doing business. So it's one of those things, those are more things you just got to keep in mind. But as always, talk to your tax person and work that out with them. They will be more than happy to help you. Trust me on this. Now, AMT works basically. incomes above the annual AMT exemption amounts will trigger the alternative minimum tax. The AMT payers who are typically they'll have a relatively high income, they essentially calculate their income tax twice, under regular tax rules and under stricter AMT rules, and then they will have to pay the amount owed. So basically, it's one or the other. If the AMT is higher, the 6251 gets filed. That's the form that you put the AMT on. That gets filed, and then whatever tax is there at the bottom, the AMTI, the alternative minimum tax, taxable income. Once that's calculated, the AMT has to be paid, whatever that amount ends up being. The exemption amount for singles, $75,900. Married filing joint, $118,100. And married filing separately, it's $59,050. The reason for that, of course, is you take joint, you divide it in half. The $118,100 becomes $59,050. Now, with other things you'll hear in tax law, a lot of it will be similar to single. This is one of those things. No, that's not the case. Income at which the exemption begins phase out for single, $539,900, $1,079,800, and of course, married filing separately, $539,900. So you see, in this case, when the income, for the exemption begins to phase out, the single and the married filing separate are the same. The AMT exemption amount for certain individuals under 24 equals their earned income plus $8,200. So that will apply to, I'm going to be honest, that'll more than likely apply if you're very young and you're earning a good bit of money. That typically happens, believe it or not, with like programmers, engineers, things like that. There are things you can do, like when you're getting out of college and you're getting certified, if you're working hard and you're making your way through the world, or if you have a good technical skill. In New York, believe it or not, electricians, mechanics, and plumbers, those are like, I call those like the big three of like vocational trades. Those people make a good sum of money basically as soon as the program is over, and they may be subject to AMT as well. Okay, so this is how you're going to calculate. Well, this is how it's supposed to be calculated. First, you have to calculate your taxable income. But here's what happens. You have to do it with some tax exclusions, some tax deductions coming out. The AMT rules will have certain guidelines as to how that gets calculated. One of those things that you have to realize, they have something called tax preferences and tax adjustments. Those things do affect how the AMT gets calculated. One of those things is the state tax. You basically have to say, hey, let's say you paid $10,000 state tax. You basically have to add back in, your refund amount, and you have to subtract that, take that out of your deductions. So you can no longer use that with AMT. AMT is like all of that comes out. You basically can't use it. So you got to keep that in the back of your head. Okay, once you have your AMT, for your AMT version of taxable income, you subtract the AMT exemption amount. So once you calculate basically where your taxable income is for AMT, you go back to that exemption amount. For instance, let's say it was at $75,900. So you slap that in there, and then whatever's left after you're done, as long as you're under that 539, once you have what's done, you're going to take that and you're going to multiply that by 26% or 28%. Now there are several tax brackets which I discussed in the previous video. Depending on where you are with your regular taxable income tax bracket, that'll determine if you're going to be paying the 26% or if you're going to have to calculate the 28%. Okay, you have to also remove the foreign tax credit, the AMT foreign tax credit if you qualify for it, and then you are left with your income tax and the AMT rules. So, quick example, let's say I have $100,000 of taxable income on the AMT. I'm to remove the 75,900. That leaves me with $21,100. Now I can take 26% of that, 28% of that, and that number is going to be my AMT. That'll be my tax. Now, if that number happens to be lower than the regular taxable income and lower than the income tax that I have to pay regularly, if that number's lower, I don't have to worry about the AMT. I just have to pay the regular tax. That's why there's a criticism, because if the AMT is supposed to make sure that somebody that makes more money is paying their fair share, why are we generating something that doesn't make sure that they're paying more than the average person? That's the number one criticism of AMT. And that's it right there. Right in the calculation. If it's less, then I just pay the regular tax, which we're going to be paying anyway. And if it's higher, you have to pay the AMT. You have to pay the higher amount of the two. Now, what tax breaks do you lose under AMT? Of course, you're looking for deductions, credits, anything above the line deductions, below the line deductions. You're just looking for something to reduce your taxable income. But there are certain things, like I talked about before, state and local taxes, that $10,000 limitation on your state and local. You cannot take that with AMT. That actually has to come out to recalculate. Property taxes are included for that. There are certain business items that you can't even take. So, pardon me. So there's just certain things that you just don't get. So you just have to keep that in mind and make sure that as much as possible, you're doing things that can affect you in ways that are positive for your tax future. Now, one thing I will tell you, do not purposely earn less money to avoid the AMT. That makes no sense. There are a lot of things you can actually do to make sure that you're taking care of all of your financial future. There are things that you can do also to make sure that the AMT can either be lowered as low as possible or completely eliminated so that you only have to worry about paying your regular tax. There's a lot of things you can do. So please, the worst thing in the world you can do is take less money. If you're working, take every dime you're entitled to, just make sure you pay the right amount of tax on it. Now, there isn't much you can do to avoid paying AMT, but you can get your AGI lowered by maxing out your 401k contributions. The IRA, health savings account can also help. So those are all things you can definitely do to make sure that your AMT is getting lowered. Again, there are things out there that will help you lower your AMT. Okay? So don't take lesser of your money. Like, it makes no sense. Okay? Now, this was a little bit more, I would say, more judicious than what I would typically deal with, but it's important. And there are some things that I was talking to you about that's not in there, but one of the things that was important that I mentioned was you cannot escape AMT calculations just because you're not in that top 37% of income, okay? Which starts at $539,900. It's not just them, okay? You're really supposed to be calculating AMT regardless of your income level to make sure you don't have to pay it. And I'd say 75% of taxpayers, they don't really have to worry about AMT. But there's a good bit of you that when you're doing your tax return, no one really bothers to do the calculation, and they really should. So just to make sure you don't owe it. Because the last thing, again, you want is a bill in the mail saying, okay, well, you're a couple, you guys made like $300,000 together, and no one bothered doing the AMT calc. You don't really have any deductions. You don't have any write-offs that will take you below the line or above the line. That'll lower what your taxable income is. So you're gonna now, you owe the regular tax, but you're still I'm still supposed to calculate your AMT just to make sure you don't owe it. So it's better to always err on the side of caution, and that's really how it should work. It shouldn't be one of those things that's avoided. So it's just best to talk everything over with your tax preparer and your accountants, your advisors. If you have a financial planner, even, they're really good, by the way, because they get a wide breadth of not just accounting, but of also finance. So there's things you can move from like your taxes to your mortgage to investments. So those guys are really awesome as well. So you just need to get someone that's going to sit down and discuss these things with you and get you ready for doing your taxes. It's a little tedious, but in the long run, it actually helps you. It gives you a better understanding and helps you plan a lot better for the future. Now, with that being said, I want to thank everybody for joining my channel today, my tax guy, and I appreciate all the likes and follows. Next time I speak to you guys, I am going to delve in a little bit into that adoption credit. It has changed, but you really need to understand exactly what it is that doesn't count. Everybody wants to know what counts, and they should also be aware of certain things and situations that can affect the lowering of a credit. I'm going to start doing that as well. I'm going to talk to everybody about things that really affect, how you do your taxes, but all of this stuff will be upcoming. I'm really excited to talk to you guys. Thank you again for coming to my channel and watching. Have a good one. I'll see you next time.